Welcome. Today we're diving into the world of government taxation. Taxes are a fundamental part of how societies function, funding everything from schools to roads. But what exactly is taxation and why do governments collect taxes? In this video, we'll break down the basics, explore different types of taxes, and see how they impact our daily lives. Whether you're a student, a business owner, or just curious about where your money goes, understanding taxation is essential. Let's start by looking at what taxes are and why they matter. Taxes are mandatory payments made by individuals and businesses to the government. These payments are used to fund public services and infrastructure. Without taxes, governments wouldn't have the resources to provide things like healthcare, defense, and public transportation. Taxes come in many forms, and each type serves a unique purpose. Understanding the basics of taxation helps us see the bigger picture of how society operates and how government policies affect our lives. Governments tax their citizens and businesses to generate revenue. This revenue is crucial for running the country and providing essential services. Taxes help redistribute wealth, reduce inequality, and promote economic stability. By collecting taxes, governments can invest in public goods, support vulnerable populations, and maintain law and order. In short, taxation is a tool for building a better society and ensuring everyone contributes to the common good. There are several types of taxes that governments use to raise money. The most common include income tax, sales tax, property tax, and corporate tax. Each type targets different sources of revenue. For example, income tax is collected from individuals' earnings, while sales tax is added to the price of goods and services. Property tax is based on the value of owned assets, and corporate tax is paid by businesses on their profit. Understanding these types helps us see how taxation affects everyone differently. Income tax is one of the most familiar forms of taxation. It's a tax on the money individuals and businesses earn. Governments usually collect income tax annually, and the amount you pay depends on how much you earn. In many countries, income tax is progressive, meaning higher earners pay a larger percentage of their income. This system aims to ensure fairness and help fund services that benefit everyone. Sales tax is added to the price of goods and services at the point of sale. Whenever you buy something, a percentage of the price goes to the government as tax. Sales tax rates can vary by region and by the type of product. Some essential items like food or medicine may be exempt or taxed at a lower rate. Sales tax is a major source of revenue for local and state governments. Property tax is charged on real estate, such as homes, land, and commercial buildings. The amount you pay is usually based on the value of your property. Local governments use property taxes to fund schools, police, fire departments, and other community services. If you own property, you'll likely receive a property tax bill each year. This tax ensures that property owners contribute to the upkeep of their communities. Corporate tax is paid by businesses on their profits. This tax is a significant source of revenue for many governments. The rate and rules for corporate tax can vary widely between countries. Some governments offer tax incentives to encourage investment or job creation. Corporate taxes help ensure that businesses contribute their fair share to society, supporting public infrastructure and services. Direct taxes are collected by intermediaries, like retailers, rather than directly from individuals. Examples include value-added tax (VAT) and excise duties on products like alcohol or tobacco. These taxes are included in the price of goods and services, so consumers pay them without a separate bill. Indirect taxes are often used to influence consumer behavior, such as discouraging smoking or excessive drinking. Direct taxes are paid straight to the government by individuals or organizations. Income tax and property tax are examples of direct taxes. These taxes are usually based on your ability to pay, such as your income or the value of your assets. Direct taxes are considered more equitable because they can be adjusted according to a person's financial situation. Taxes can be classified as progressive or regressive. Progressive taxes like income tax take a larger percentage from higher earners. Regressive taxes like sales tax take a larger percentage from lower income individuals because everyone pays the same rate, regardless of income. Understanding these differences helps us see how tax policies can impact social equity and economic fairness. Most income tax systems use tax brackets, which means different portions of your income are taxed at different rates. For example, the first portion of your income might be taxed at a low rate, while higher portions are taxed at higher rates. This system is designed to be fair and to ensure that those who earn more contribute more. Tax brackets can change over time as governments adjust their policies. Tax deductions reduce the amount of income that is subject to tax. Common deductions include expenses for education, healthcare, or mortgage interest. By claiming deductions, taxpayers can lower their taxable income and reduce their overall tax bill. Deductions are an important part of tax planning and can encourage certain behaviors, like saving for retirement or investing in education. Tax credits directly reduce the amount of tax you owe. Unlike deductions, which lower your taxable income, credits subtract from your total tax bill. Some credits are refundable, meaning you can receive money back even if you owe no tax. Examples include credits for childcare, education, or renewable energy investments. Tax credits are a powerful tool for supporting families and promoting policy goals. Withholding tax is taken out of your paycheck by your employer and sent directly to the government. This system ensures that taxes are collected regularly throughout the year, rather than in one lump sum. Withholding helps prevent large tax bills at the end of the year and makes it easier for governments to manage cash flow. Most employees are familiar with this process, as it's a standard part of payroll. Every year, individuals and businesses must file tax returns to report their income and calculate how much tax they owe. Filing a tax return can be complex, especially if you have multiple sources of income or claim various deductions and credits. Many people use tax software or hire professionals to help with this process. Filing accurately and on time is important to avoid penalties and ensure you get any refunds you're owed. Tax audit is when the government reviews your tax return to ensure accuracy. Audits can be random or triggered by unusual activity, such as large deductions or inconsistent income. If you're audited, you may need to provide additional documentation to support your claims. While audits can be stressful, they are a normal part of the tax system and help maintain fairness and compliance. Failing to pay taxes or filing incorrect information can result in penalties, interest, or even legal action. Governments take tax compliance seriously because tax revenue is essential for public services. Penalties are designed to encourage timely and accurate filing. If you make a mistake, it's important to correct it as soon as possible to minimize consequences. Tax revenue funds a wide range of public services, including education, healthcare, transportation, and national defense. Governments allocate tax money based on priorities and public needs. Transparent budgeting and spending help build trust between citizens and the government. By understanding where tax money goes, we can better appreciate the role of taxation in society. Significant portion of tax revenue is invested in education and healthcare. Public schools, universities, hospitals, and clinics rely on government funding to operate. These services are vital for a healthy, educated population and contribute to long-term economic growth. By paying taxes, citizens help ensure that everyone has access to essential services regardless of income. Taxes also fund the construction and maintenance of infrastructure, such as roads, bridges, and public transit systems. Reliable infrastructure is essential for economic activity and quality of life. By investing in transportation, governments support businesses, reduce traffic congestion, and improve safety. Tax-funded infrastructure projects create jobs and stimulate local economies. National defense and security are major areas of government spending. Taxes pay for military forces, emergency services, and disaster response. These services protect citizens and maintain stability. While defense spending can be controversial, it remains a key responsibility of governments to ensure safety and preparedness for emergencies. Social welfare programs such as unemployment benefits, pensions, and food assistance are funded by taxes. These programs provide a safety net for vulnerable populations and help reduce poverty. By supporting social welfare, governments promote social stability and economic opportunity for all citizens. Taxes fund a wide range of public goods and services, from parks and libraries to clean water and sanitation. These services benefit everyone, regardless of income or background. By pooling resources through taxation, societies can provide amenities that individuals might not afford on their own. Taxation is a powerful tool for shaping economic policy. Governments can use taxes to encourage investment, support innovation, or address social issues. For example, tax breaks for renewable energy can promote environmental sustainability. By adjusting tax rates and incentives, policymakers influence economic growth and stability. One of the main goals of taxation is to redistribute wealth and reduce inequality. Progressive tax systems ensure that those with higher incomes contribute more, helping to fund services for those in need. Redistribution through taxation supports social cohesion and a more balanced society. In a globalized world, international taxation has become increasingly important. Multinational companies operate across borders, making it challenging for governments to collect taxes fairly. International agreements and cooperation help prevent tax evasion and ensure that companies pay their fair share, no matter where they operate. Tax avoidance and tax evasion are two terms often heard in discussions about taxation. Tax avoidance is the legal use of strategies to minimize tax liability, such as claiming deductions. Tax evasion, on the other hand, is illegal and involves deliberately hiding income or falsifying information. Governments work to close loopholes and enforce laws to ensure everyone pays their fair share. The rise of the digital economy has created new challenges for taxation. Online businesses and digital services can operate globally, making it harder for governments to track and tax transactions. New rules and international cooperation are needed to ensure that digital companies contribute fairly to public finances. Small businesses play a vital role in the economy, and taxation can have a big impact on their success. Governments often provide tax incentives or lower rates to support entrepreneurship and job creation. Understanding tax obligations helps small business owners plan effectively and avoid surprises. For individuals, understanding taxation is crucial for managing personal finances. Knowing how taxes are calculated, what deductions are available, and how to file returns can help you make informed decisions. Good tax planning can save money and reduce stress during tax season. Investments such as stocks, bonds, or real estate can have tax implications. Capital gains tax is charged on profits from selling investments. Some investments offer tax advantages like retirement accounts or municipal bonds. Understanding these rules helps investors maximize returns and minimize tax liability. Planning for retirement involves understanding how taxes will affect your savings. Some retirement accounts are taxed when you contribute, while others are taxed when you withdraw funds. Knowing the tax rules for retirement savings can help you plan for a secure future and avoid unexpected tax bills. Buying or selling real estate can trigger various taxes, including property tax, capital gains tax, and transfer taxes. Understanding these obligations is important for homeowners and investors. Proper planning can help minimize tax costs and ensure compliance with the law. Inheritance or estate taxes may apply when assets are passed on after someone's death. These taxes can affect how much heirs receive. Some countries have high inheritance taxes while others have none. Planning ahead can help families manage these obligations and preserve wealth for future generations. Donating to charity can provide tax benefits. Many governments allow deductions for charitable contributions, encouraging people to support causes they care about. Keeping records of donations is important for claiming these benefits. Charitable giving not only helps others but can also reduce your tax bill. Governments use taxes to promote environmental goals. For example, carbon taxes are designed to reduce pollution by making it more expensive to emit greenhouse gases. Tax incentives for renewable energy encourage investment in clean technologies. These policies help address climate change and protect natural resources. Healthcare funding is a major reason for taxation in many countries. Taxes pay for public health programs, insurance subsidies, and medical research. By pooling resources, societies can provide healthcare for all citizens, improving overall health and reducing inequality. Education is another key area funded by taxes. Public schools, universities, and vocational training programs rely on government support. Investing in education helps build a skilled workforce and drives economic growth. Tax-funded education ensures equal opportunities for all. Taxes are used to fund social policies that support families, children, and the elderly. Programs like child benefits, pensions, and disability support are made possible through taxation. These policies help create a more inclusive and caring society. Collecting taxes is not always easy. Challenges include tax evasion, complex regulations, and the rise of the digital economy. Governments invest in technology and enforcement to improve compliance and reduce fraud. Ongoing reforms aim to make tax systems fairer and more efficient. Transparency in how tax money is spent is crucial for building public trust. Governments publish budgets and financial reports to show how funds are allocated. Accountability ensures that tax revenue is used effectively and for the benefit of all citizens. Taxation systems continue to evolve as societies change. New technologies, global challenges, and shifting economic priorities all influence how taxes are collected and spent. Staying informed about tax policy helps individuals and businesses adapt to these changes and make better decisions. Let's recap what we've learned. Taxes are essential for funding public services and building strong communities. There are many types of taxes, each serving a unique purpose. Understanding how taxes work helps us make informed decisions and appreciate the role of government in our lives. By paying taxes, we all contribute to a better society. Thank you for joining this exploration of government taxation. As we've seen, taxes are more than just a financial obligation, they're a cornerstone of modern society. By understanding taxation, we can engage more thoughtfully with public policy and contribute to a fairer, more prosperous future for everyone.